So I'm going to show you an interesting strategy based on price action today called the gap up. It's basically based on a short only intraday principle, and we will be using F&O stocks, but we'll trade them in the cash market short only intraday to produce this equity curve. That means these returns over the last few years. The interesting thing is, apart from the rules, I'm also going to share how we're going to test whether the strategy works or not. One advantage of this strategy is that it's intraday and you only need to spend the first half of the morning to trade, and after that your stop loss will get hit or you'll make a profit, either of the two. The disadvantage is that to actually place the order, you should be good at placing the order really quickly. So if you're very new to the market, this may be a little difficult to do. So let's get started. So there are 3 stages on any strategy. The first step is getting the idea, also called the hypothesis. This is what you're basing your strategy on. After the idea stage, we'll move to the rules stage where we'll code it in simple English of what our rules should be. That is, what's your entry, what's your exit, etc., etc. And finally, we're going to backtest that strategy. So let's start with the idea. Imagine for a second that there are thousands and thousands of retail traders who have invested in this blue chip company, and let's say they're making about 50,000 rupees profit on that stock, and the stock is moving up. Now imagine that at night there's some really good news about that company. Maybe it got some foreign orders, maybe it's cracked a huge deal. The vibe is amazing. The next morning, the market opens higher than the previous day. So if the market, say, closed at 100, it actually opens at, say, 110 or 120, like a really high number just as the market opens. In other words, there's a gap. What do you think will all these investors do? They were making 50,000 before this. Now suddenly they're making, say, 75, 80,000 in paper profit. What do you think they're going to do? Do you think most people will book profit or will actually buy more stock? Well, the truth is, at least I think, most people will book profit because they suddenly see some profit coming here and they might book profit. Now, when you book profits, you are selling. So when you sell, what do you think happens? The market actually falls. So, okay, maybe this is our idea. When the market gaps up, it falls. Let's see whether this idea actually makes sense. Let's see a few examples and see whether this really happens or not. So I have a few examples here. Okay, so this is where I look at charts. I use a tool called AmiBroker. So you see these vertical lines, these are days. So each vertical line represents one day. So the day started here, and then the day closed here. As you can see, this was the day's range. The next day, the market gapped up over here and then went up. Notice on that day, the market had an intraday fall and then it recovered. So in this case, the market gapped up, fell down and then recovered. Let's see another example. So I have another example here of Divis Labs, and this is January 2021. As you can see, the market had this range. The next day, the market opened higher, but immediately fell down. Again, in this case, the market opened higher and then fell down. There was a gap. Let's see one more example. This is Tata Chemicals, January 2021. This was the range of the day. Market opened up and quickly fell down intraday. So 3 examples, all 3 in this case, market gapped up, there was some profit booking and the market went down. So a summary of gap means when the markets open greater than the previous day's high, so previous day's range, it opens greater than the previous day's high, we think there will be an intraday fall. Okay, it's not a long-term trend change, it's just an intraday fall. So now what we really need to test is, every time there's a gap, how many times does the market fall and how many times does the market go up? Let's see if we can short every time the market gaps up. So now let's move on to the second phase. Let's take our idea and define it more specifically. What I really want, I want to know the entry time. I want to know stop loss and target. And I want to know what to trade. More importantly, before we actually do this, let's define a gap. Okay, so let's say it's current day's open is greater than previous day's high. So if today's open is 100 rupees, Previous day's high should be say 99. So there's a gap of 1 rupee. That's a gap. Once we get that gap, then we will enter. Now, what time do you think we should enter? Now we have to be specific. Market opens at 9:15. I can put in 9:15, but sounds a little dangerous because the market opens, it's really volatile. So maybe we can select 9:20 a.m., 5 minutes after the market has sort of stabilized, okay? Now you can change this to any number you want, right? You can decide what number you think makes sense. I'm gonna pick 9:20. The stop loss and target, we'll just keep it simple. What I've written over here is 1% and 1%. Quick question though, if we've shorted at 100, what is our target? I hope you said 99 because 100 minus 1% is what your target's going to be. Remember, we're shorting, so you want to make money when the market falls. We're not going long. And we're going to scan F&O stocks, but we're going to, I'm going to put trade in cash. Okay, so you're trading equity only. So in summary, first we find when current day open is greater than previous day's high. This will give us a list of stocks. At 9:20, we can actually short. So you place your sell order at 9:20 a.m. Your stop loss and target is 1% and 1%. So stop loss is 1%, target's 1%. And we'll be going through F&O stocks to trade cash in the intraday market, right? Got it? So now what we need to do is, we need to test this logic on a tool. You can use Excel, you can code it, you can manually do it. I'm today going to use AmiBroker. So I have AmiBroker open here. It's pretty simple. You've seen it before. We have stocks on my right. I can select different stocks from my left. So Power Grid, PVR, Ramco Cement, Reliance, SAIL. I can select the stocks here. I have the data loaded. And on the right, I have the chart. You can also see the name of the company, SAIL, that's Steel Authority of India, 10-minute chart, okay? And I can change the time frames from here as well. So hourly, monthly, yearly. Now what I'm going to do is AmiBroker is take this logic and I'm going to hit scan and backtest, and this entire logic is going to run for the last 5 years from 2015 to 2021 January data that I have. And let's see how fast this happens. So I'll go to the analysis window, I'll click on scan. It'll scan all the stocks and find all the short orders. Then I'll click on backtest and it will place orders over historical data to check whether this logic made sense from 2015 till now. So you've got this logic and you've tested it over thousands of trades. So let's see whether that actually worked or not. I'm going to sort this data by date, and let's look at one of the profits over here. So I'm going to look at Canara Bank, current trade arrow. And as you can see over here, we have Canara Bank. That's a short. So this is the open of the day. It's greater than the previous day's range. We shorted at 9:20, market came down and we exited. Can someone tell me why we exited only after 1-2 bars? Because our profit target of 1% was hit, and AmiBroker calculated that. Let's see another example. I will open Mindtree. Show current arrow, Mindtree. There's another example. So I'll have to scroll back, but look at the up and down arrows. The down arrow means short, up arrow means exit. So as you can see, the market opened greater than the previous day's range. So yesterday's high was 1,800 and the open was 1803.8, which is higher than 1,800. And that's a gap. You would short here after that candle closes at 9:20 a.m. and you exited as soon as 1% profit was made. Now you'll notice in our analysis window, it shows 0.88%. This is because we've added commissions, brokerage and taxes to the strategy. So now let's see what was the returns from 2015 to 2021 January. And I can click on this report and I can see that the net profit is 13%. Right? Can you see that? 13%. Is that a lot? No. Probably fixed deposit gives better than that. But is it profitable? The answer is yes. So in this case, we're seeing that in all these years, it was profitable, but not enough profit. So how do we fix this? Let's try to fix this, right? And what I'll do is I'll also show you the returns chart. the equity curve. This is the account balance. Can you notice this account balance goes up, then falls, goes up, then falls. Can someone tell me why this is happening? Why isn't it a consistent move up? So I hope you've come up with the answer, but I'll tell you why. I'll show you a few more things. We've tested 5,900 trades. That's a lot. So over 5,900 trades, if it's profitable, that means the logic makes sense. The money management doesn't make sense. So who can tell me what's wrong? Let's go back to the drawing board. Over here, you remember we made the stop loss target 1% and 1%. Let's change that, okay, to say a 1.3% and say, let's say a 5%. So now my stop loss is 1.3 and it can be 1.5, it can be 2, it can be whatever you like. I'm choosing 1.3 randomly and I'm increasing the target to 5%. So now the risk reward ratio is much better. It's like 3x or more. Now, let me show you how you can even change that. All I have to do is click on edit and I have to scroll down and you'll notice over here it says SL optimize 1. That means stop loss 1. I just changed that 1 to 1.3 and then it says TGT 1. I'll change that 1 to, what did we decide? 5, right? So I'll just change that to 5. Don't worry about the other pieces of code. There's standard snippets that you can just copy paste and edit. Just focus on the stop loss and target. I just changed 2 numbers. I'll hit save and then I'll hit scan and you'll see in seconds our strategy is being scanned, and then you click on backtest. And now everything's the same. Our new stop loss and target is now done. So now when we open the report, you notice the net profit. I love this, right? The net profit is much higher. Of course, there are 3 problems here before you get excited. It assumes you've taken all the trades perfectly. In the real world, you can't do that unless you have an algo or you're very good at execution. It also assumes that the market was perfect. There could be times when your broker is down. There could be times when तुम्हारे घर पे light चले गई, the electricity is gone. There could be some execution errors that AmiBroker cannot account for. What it can tell you is, does your logic work over a long period of time, right? So that way this totally makes sense. You'll also notice that this is over 5,800 trades. Let's see the equity curve, shall we? So the returns graph looks like that. Isn't that beautiful, right? That's nice. Notice the dips. So market, the account balance went up, then it came down. So that dip can be multiple months, right? So how much is that dip? What is the worst case scenario over these 5,000, 6,000 trades that your system got? Wouldn't that mentally prepare you? So that number is called drawdown, okay? So if you scroll down, you'll see the maximum system drawdown is 8.85%, which means if your capital is 1 lakh, the worst case scenario is about 8,800. I always recommend, if you can calculate drawdown, right? Whether you're doing through Excel or manually, doesn't matter. You should know what your system drawdown is, worst case scenario. So if your system over here, like this system shows about 9%, assume it's double, assume it's 18%. So if your capital is 1 lakh, over here it says 9,000 loss, that's about 9%, assume it's 18,000. Because, things change. And we are trying to make sense of the chaos by doing all this analysis, but assume the worst. So you should double your system drawdown, assume a bad drawdown, and for your return, just reduce it by 30-40%. And say, okay, if this happens, will you be happy? And if the answer is yes, then you should probably trade with a few thousand rupees and slowly scale it over many years. Remember, traders want to trade intraday, but they want results within weeks. This is not going to happen. Trading, just like any business, is a daily endeavor that you need to go through, and you'll see results after years, or maybe at least a few quarters. If you're expecting returns within a few months, don't trade. Let me show you what I mean by this. We have something here called a pivot table, okay? The pivot table tells us, a profit table tells us how much profit we made on a yearly basis. So you can see 2015 was 47%, 16 was 19%, 17 was 30%, then it was just 39, then 2019, the entire year was only 12%. You have to be okay with that. And then 2020 was 42%. So now the question is, if you traded such a system or a simple system and you made, say, 20%, would you quit and be like, damn, I didn't make 40? So returns cannot be predicted over a short period of time. They have to be predicted over a long period. And notice some months are negative, right? So March in 2016 was negative, April was negative, May was barely profitable. You still have to trade the fourth month. This is the real challenge, guys. So if you don't have a trading system and that is step one. So if you don't have this, you're not even playing the game right. So get this done first. The second biggest challenge as a trader is to actually execute the strategy once you've figured it out what strategy you want for a long period of time. That's what creates wealth. So I hope that helped. But the mental execution side of trading is the most difficult part. But anyway, enough of Gyan. Let me show you a little bit more about the strategy. You can also see the total number of winners. So 49% were winners. You can see the losers were 50%. And so many other stats. Let's see some examples, shall we? I will open up, say, Ramco Cement. Let's see what happened here. Oh, isn't that beautiful? So, okay, you'll notice that, sorry. Yeah. So you notice this is the day's range and the market opened above yesterday's range. We shorted, it went down, and you exited within this bar with a 5% target. There's another lesson here. Your risk-reward ratio has to be super good. So if you have any ideas, right, maybe you want to change the timing from 9:20 to something else, you can do that and test it. You want to change your stop loss and target, you can do that and test it. You want to change your universe, maybe you only want to trade Nifty, Bank Nifty, you can test it. I can't run these tests for you because I'll go crazy, but it can be done once you have some setup, maybe on Excel, VBA, or AmiBroker, or if you know coding through Python, maybe through that. But AmiBroker is easily the easiest way to do it. And for a new person to start, it is just perfect. So if you found this interesting, you should check out the 8-week advanced course we have on LearnApp. It's 8 weeks of pure knowledge where you can learn how AmiBroker works from scratch and create strategies using price action, indicators, or even options for the short term or even really long term. I think it's a really cool way to decode the markets instead of guessing it. So you can focus on the execution versus knowing what to do every day. It will generate buy and sell signals for you, so you don't have to do any of that math. So do check that course out. 3 things I want to leave you with. The first thing that you need to become a successful trader is to get a strategy that's back-tested and suits you. So this strategy, for example, requires only 10-20 minutes in the morning, and then you leave it alone. You place a stop loss and it's done. So that works for people like me who don't want to look at the screen. There are other people who want to do multiple trades. You can change the strategy up for that. If you're a long-term trader, want to sit only once a week, you can change the time frame and sit only on Fridays. So find your strategy, find your style. The second is you have to find like-minded people, right? So find a place where there's a community where you can talk to each other. I'm very proud to say LearnApp has 100,000 active learners on the platform. So people who are there, they can learn from each other, and going forward will make the community slightly better so you can learn from each other. And the third thing you actually need to be successful is being able to optimize your strategy in case shit hits the roof. So sometimes the market timings may change. I remember there was a time when markets used to open at a different time. Now they open at 9:15. So when market structure changes, you need to change your strategy a little bit. You should have the ways to actually edit your strategy to suit the market. And this brings me to my final point. I know I said 3, but I'll give you one more. Find a way to do the mental side of trading. I would recommend have a diary, write down all the trades you took, what went wrong, did you follow the strategy to its T or not? And just writing this over a period of months, you'll actually look back and see how you've improved as a trader. You're in a mental game where the smartest people in the world are fighting with each other to earn from the market, right? So if you are not at mental peace, you won't be successful. So I hope you found this useful. Hope to make more videos like this. Thanks for watching.